You're listening to Seven Horns AI, your AI-powered market update. Good morning, everyone. It's Thursday, June 4th, 2026, and we're just hours away from the U.S. market open. Overnight, Asian markets broadly pulled back, mirroring Wall Street's down session yesterday. Japan's Nikkei 225 index closed down 1.4% at 67,470.69, pressured by tech names, with SoftBank Group notably slumping 11.2%. Hong Kong's Hang Seng index also finished lower, down 1.6% at 25,234.24. Analyst sentiment for the region remains bearish, and our Japan ETF proxy is currently edging down 0.2% in pre-market. Heading into the U.S. Open, futures are presenting a decidedly mixed picture. S&P 500 futures are down about 0.3% from yesterday's cash close, suggesting a modestly cautious start to the day. However, we're seeing a notable divergence. Nasdaq 100 futures are under continued pressure, down roughly 1.0%, while Dow futures are actually pointing higher, up about 0.5%. This signals a potential rotation out of growth and technology names and into more defensive, value-oriented sectors. In Europe, markets are grappling with sticky inflation, as May CPI in the Eurozone hit 3.2%, above the ECB's 2% target. Yesterday, the S&P 500's impressive 9-day winning streak came to an end, with markets opening under pressure and a steady grind lower throughout the session. The Dow Jones Industrial Average bore the brunt of the selling, dropping over 620 points, or 1.21%, its worst session in recent weeks. Several catalysts compounded the sell-off. Renewed U.S.-Iran tensions escalated geopolitical uncertainty, boosting oil prices and triggering a flight-to-safety bid in gold, which is up 0.6% in pre-market today. Disappointing guidance from Broadcom rippled through the semiconductor and broader tech space, directly contributing to the Nasdaq's underperformance. Rising bond yields also added headwinds for equities, particularly rate-sensitive growth names. On the upside, the pattern day trader rule was eliminated, and SpaceX announced plans for a massive IPO aiming to raise up to $75 billion. Among megacaps, Meta was a standout yesterday, surging 4.24% against the broader sell-off, though it's giving back about 0.62% in pre-market. Nvidia, however, was the weakest link, falling 3.62% yesterday and extending losses by another 0.85% this morning. Meanwhile, Microsoft and Amazon, which fell hard yesterday, and Apple, which moved lower, are showing pre-market rebounds of roughly 0.8 to 0.9%, suggesting some bargain hunting. Today's aggressive reversal in yesterday's big gainers, like Navitas Semiconductor now down 6.7%, shows a cautious risk-off tape. Looking ahead, traders will be watching for any further developments in geopolitical tensions and the ongoing rotation between tech and value. Economic data points like April's JOLTS and May's ADP jobs report have fueled hawkish expectations for the Fed, with ISM Services PMI printing 54.5. We'll also keep an eye on upcoming earnings reports from companies like CrowdStrike, Broadcom, and Lululemon Athletica. That's your pre-market briefing from Seven Horns AI. Good luck out there today. Visit sevenhorns.ai for more.